the top line, but Mangalam is also joining us now. Mangalam, at the start, this looks like quite a good set.
Well, these are good numbers coming in from Nestle, and it's a top-down beat because the revenues have grown at around 18.3%. The street was expecting a number much lower than that, and importantly, domestic sales have come in at around 18%. The street was working with a number anywhere between 12 to 15% for their domestic vertical, and that has translated into their EBITDA as well, which is close to around the 1,050 odd crores mark, much above what the street was working with, and as a result of which the net profit has been a beat as well. Looking at the management commentary too, out-of-home products have done extremely well for them this time around, and that was understandable because things are gradually moving to normalcy, and as a result of which these verticals for the company, a large part of their numbers which come in from out-of-home impulse consumption categories are doing well, and while that is doing well, we aren't seeing a big letdown in any of their categories which are consumed at home itself. So those are a couple of factors which are doing well. Nestle as a stock has been an underperformer over the last 1 year or so, trading at around 61, 62 times valuations. So these numbers, which are a mild beat from the top down, from the top line to the EBITDA as well as the net profit, could go down well, primarily because of the stock's underperformance as well. And maybe the street will relook at Nestle now, also because of the bigger triggers going forward, which is the pet care business coming into their fold as well, which was announced in the previous quarter.
Okay, thank you very much for that. EBITDA margins have come in at 22%. It's declined about 250 basis points on a year-on-year basis. By the way, reading the statement out from Mr. Suresh Narayan, the chairman and MD of Nestle, he says the company has witnessed the highest sales growth this quarter in the last 5 years. It's been on the back of strong volume and a mixed evolution with broad-based double-digit growth across all categories. They're seeing strong growth in large metros and mega cities, but even in the smaller towns, including the rural market. Nestle, amongst the rest of the FMCG pack, has a smaller rural presence, though they are expanding in the rural presence. But at least the management commentary seems to be that growth has been broad-based in the larger cities and even in the rural space. Revenues are up close to about 18.3%. Mangalam?
Yeah, the commentary is good, but what's also better right now is that as far as the short to medium term is concerned, I'm reading from the management commentary, they're saying that we're witnessing early signs of stability in prices of few commodities such as edible oils and packaging materials, even as fresh milk, fuels and grains as well as coffee costs are expected to remain firm with continued increase in demand and volatility. Some signs of stability in a couple of key raw materials should at least soothe the fray nerves of the street when it comes to high input inflation, because most of them are now betting for margin recovery in all these consumer companies in the second half of this year.
Okay, thank you very much for that. And Nestle has also launched its D2C direct-to-consumer platform called www.mynestle.in. So those are numbers coming in from Nestle. But we've got another corporate waiting by